Welcome to this week's episode of Millennial Money. So last week we actually touched on ISAs and we did a video on cash ISAs and whether it's worth getting out an ISA or a savings account. So this week I'm actually going to talk to Damien about the different types of ISA and what they all mean and if any of them are actually good for you. So Damien, what's a cash ISA? I know we touched on it last week, but just a quick summary.
So a cash ISA, if you didn't watch last week's video, is basically like a savings account, but where it's tax-free forever. So that's it in a nutshell. Now there are different types of ISAs. So we're going on to
A stocks and shares ISA.
So a stocks and shares ISA is basically an investment ISA. So instead of having cash, what you do is you can invest in things like shares, in funds, which are a form of a collective investment. Instead of individual shares, you invest in a fund that invests in lots of shares. So you can do that within that same box of an ISA, and therefore all growth is tax-free, all income is tax-free. So it's a way of investing for the long term. So you've got the greater upside potential with investing in, say, the stock market, but you've also got the ability to lose money, whereas cash, as long as your bank or building society doesn't go bust, but even then you've still got protection, you shouldn't lose any money, but if you invest, it can go down as well as up.
And there are actually quite a few options out there, aren't they, for investing in stocks and shares ISA. So if you're quite new to investing or anything like that, there are different ISA types out there if it can be quite a daunting process. So if you're used to investing, you can get a different type of stocks and shares ISA with providers that, you know, kind of let you do your own thing, but you can also get it with providers that help you along the way.
So there's things called robo-advisors. It's a bit of a gimmicky name, but it's basically almost an automated way of investing. So rather than having humans run your money, it's almost machinery to a certain point. But what they are, they're cheap. So they will invest your money for you, pick what investments, you just give them. It's basically buy and forget, or invest and forget. But there are other ones called fund supermarkets or investment brokers, which give you the box, almost, the ISA box, and then you can pick and choose what you want. So it's like going to a supermarket with a trolley, and then you pick what you want to put in it. They're the investments. Whereas getting a robo-advisor, which is a kind of a managed stocks and shares ISA, it's like getting a takeaway.
Yeah, so also we actually have some articles on moneytothemasses.com on the different and the best and cheapest stocks and shares ISA. So there'll be a link to the article on Money to the Masses website for the best and cheapest stocks and shares ISAs below. So we've got some other ISAs out there. What about a peer-to-peer or an innovative finance ISA?
Yeah, I always do that.
An
innovative finance ISA. So basically, peer-to-peer lending is where instead of what happens with a bank, you go and put your money in a bank, the bank might take that money and lend it to someone else, and there's that interest rate differential. So they make money on lending it to somebody else, like maybe as a mortgage, and then they will pay you some money, interest on your savings. So there is no middleman with peer-to-peer. So what happens in a very simplistic way, when you put your money with them, that money is lent out to other people, but it's actually done as a conduit. So you're almost lending to other people, so you get a better savings rate. That's the crux of it. But it's not covered by the same levels of protection as a normal ISA with a bank or building society that's regulated by the FCA. So you have to bear that in mind. So there's an element of risk in there, and it's not for everybody. But an innovative ISA allows you to... See, I did it, didn't I? I just stumbled over it. We're not going to cut it out. We're going to leave it in. They are within an ISA. So that peer-to-peer ability is within an ISA. So hence why it's called a peer-to-peer or innovative ISA.
Yeah, so we have another ISA which actually might appeal to those of you who have children, or if you're under 18 and you actually want to put a bit of money away, and that's the junior ISA?
Yeah, so junior ISAs are really aimed at parents and grandparents who want to put money aside for their children. And what it does, it's an ISA, but for kids. And because you can't have as a child, have a stocks and shares ISA. So if you were 10, you couldn't have a stocks and shares ISA. But as a parent, you can put money away for a rainy day for your children. And there are smaller, lower limits, annual limits. Because all these ISAs we've talked about, there's one overriding £20,000 limit, which you can split between each of them, except for the junior ISA, it's a separate entity. But it's for, if you want to invest for your children, it can be in cash or it can be stocks and shares, as a normal stocks and shares ISA is as well. The one thing you've got to bear in mind is that your little darling is going to turn into the sort of person that you want to have money, because by the time they're 18, they own that money and you can't stop them having access to it.
Okay, so if you are a first-time buyer, these next two ISAs might actually appeal to you. So we've got the Lifetime ISA and the Help to Buy ISA.
Yeah, so the Lifetime ISA and Help to Buy ISAs were two ISAs that were created to help people get on the property ladder. And now there are nuances between the two which you can get confused with because the Help to Buy came out before the Lifetime ISA, but very simply, a Help to Buy ISA came first, and the idea was it was going to help you to buy a property by putting regular small amounts every year away. And then what would happen, the government would give you a 25% Brucey bonus, free money on top of that when you went to buy your house. That's in a simplistic level. There are caveats around that. A Lifetime ISA came along. It's going to ultimately replace what is the Help to Buy ISA because they're disappearing next year. That came along and allowed you to put money away whereby you could put lump sums in as well as regular amounts if you wanted, but then you got that 25% bonus, but you got it on a monthly basis, so you actually accrued it over time. But you could also use it to buy a house or just keep the money eventually and just say, look, do you know what, I'm not buying a house, but I'll use it as a means of retirement funding. So it had a dual purpose. So they are incredibly popular. They are equivalent of free money. So if you are a couple out there, you can both have a Lifetime ISA, for example. You can have the difference between Help to Buy and Lifetime ISAs as well. Help to Buy are only cash, whereas Lifetime can be stocks and shares. But you've got to bear in mind, if you're investing, that it does go down as well as up. So if you want to use the money towards a house, then it may be, you might get back less than you paid in. And the other thing to bear in mind is that if you're going to buy a house within a year, you can use a Help to Buy ISA to do that, but a Lifetime ISA you can't. Now, it seems some bizarre rules, but the general rule of thumb is that if you're trying to save lump sums, then a Lifetime ISA is going to be probably better for you. If you're going to do small regular amounts, then it's probably going to be a Help to Buy will be interesting as well. And as I said, there are all these rules. So with the Lifetime ISA, if you decide to take your money out and run, as it were, before, rather than buy a house, you do get penalised with a tax charge of 25% because they're basically getting back the bonus they've given you along the way. But it does mean if you work out the maths, you can actually get back less than you paid in because you get the bonus on the bonus each year. So there are limits as well on the amount of the house that you can buy. So for Lifetime ISAs, it's £450,000. For Help to Buy, it's £250,000 limit, or £450 in London. So we've got all of this on the website, so you can go and find that on our website. We've just released a first-time buyer guide, which has all the details in. I believe
everything that you could need if you're a first-time buyer, which is really, really handy actually.
So the point of this video to take away, there are a number of ISAs out there which can allow you to invest or save in an efficient manner without paying tax, but there are particularly two which you should explore if you want to buy a house or looking to buy a house in the future, which can actually help you by giving you a little Brucey bonus on the way to saving for retirement. And again, there are rules with each of those, and there are age rules as well. For example, Lifetime ISAs, if you have to be a first-time buyer and you have to be under the age of 40. So there we go, we're done.
Yeah, so if you want anything, any more information on the ISAs, we actually have extensive articles and reviews on the best and cheapest on our website. I will attach links to those below the video, so go and check them out. Also, thanks so much for watching. Subscribe to our YouTube channel and head over to our social media, our Facebook, Money to the Masses, our Twitter, Money to the Masses, the number 2, and our Instagram, Money to the Masses.